Welcome to our in-depth tutorial on mutual funds. Today, we will dive deep into what mutual funds are, how they work, and why they could be a smart investment choice for you. We'll break it down with examples, data, and even some Q&A. By the end of this video, you'll have a thorough understanding of mutual funds and how to evaluate them effectively. So, what exactly is a mutual fund? At its core, a mutual fund is a type of investment vehicle that pools money from multiple investors to purchase a diversified portfolio of stocks, bonds, or other securities. Think of it as a financial potluck where everyone contributes to a collective meal. Imagine it this way. If you and several friends each contribute $100 to buy different types of fruits, you all get to share and enjoy a diverse fruit salad. Similarly, by investing in a mutual fund, you gain instant diversification without needing a large sum of money. Let's move on to the structure of a mutual fund. A mutual fund is managed by a professional fund manager whose job is to allocate the fund's assets in a way that aligns with the fund's investment objectives. These objectives could range from aggressive growth to stable income. Here's an example. Let's say there is a mutual fund called Growth Leaders Fund, managed by Jane Doe. Jane analyzes market trends and potential high-growth stocks. By investing in this fund, you are essentially leveraging Jane Doe's expertise to grow your money. You might be wondering, how do I make money from a mutual fund? There are two primary ways: dividend payments and capital gains. Dividend payments are distributions of a portion of the fund's earnings to its shareholders. Capital gains occur when the fund sells a security for a higher price than it was bought for. Let's bring in some data to illustrate. Suppose you invested $1,000 in a mutual fund that has a historical annual return rate of 8%. Over 10 years, thanks to the power of compound interest, your investment would grow significantly. Of course, there are different types of mutual funds that cater to varied investment goals. They can be broadly categorized into equity funds, fixed income funds, and balanced funds. Equity funds invest in stocks. Fixed income funds invest in bonds, and balanced funds invest in both. For example, if you are a risk-averse investor seeking steady returns, a fixed income fund may be more suitable for you. On the other hand, if you're looking for higher returns and are willing to take on more risk, an equity fund could be the better choice. Let's address some frequently asked questions about mutual funds. Question 1. What are the fees associated with mutual funds? Mutual funds often come with management fees, known as the expense ratio, and sometimes front-end or back-end loads, which are sales commissions. For example, if a mutual fund has an expense ratio of 1% and you have invested $10,000, you will pay $100 annually for the management of your investment. Remember, lower fees can significantly impact your returns over time. Question 2. How can I buy mutual funds? You can purchase mutual funds directly from the fund company, through a brokerage firm, or via your financial advisor. Each method has its pros and cons, so it's essential to consider which is most convenient and cost-effective for you. Question 3. Are mutual funds safe? While mutual funds offer diversification, which can mitigate risk, they are not risk-free. The value of your investment can rise or fall based on market conditions. It's vital to read the fund's prospectus and understand the risks involved. Let's compile the questions discussed so far in a nutshell. 1. What are the fees associated with mutual funds? 2. How can I buy mutual funds? 3. Are mutual funds safe? To sum up, mutual funds offer a way to invest in a diversified portfolio managed by professionals, making it accessible even for individual investors with limited capital. However, it's crucial to be aware of the associated fees and risks. That's all for today's comprehensive guide on mutual funds. If you have any more questions or specific topics you'd like us to cover, please leave a comment below. Happy investing and see you in our next video.